Let me ask you something. When was the last time you actually checked how much money you're supposed to be receiving from Social Security? Not what showed up in your account. Not the number you've been assuming is correct. I mean actually verified it, line by line, against what the law says you're owed. If the answer is not recently, this video could be worth hundreds, maybe thousands of dollars to you. Because as of March 1st, confirmed changes to Social Security are officially in effect. And most people collecting benefits right now have no idea what changed, what it means for their check, or whether the government even applied it correctly to their account. I'll tell you what else most people don't know. The Social Security Administration makes mistakes. They miscalculate benefits. They miss adjustments. They shortchange people who never even think to question the number. And right now, with multiple rule changes taking effect at the same time, the window for errors just got a whole lot bigger. Here's what frustrates me deeply about this. You didn't just stumble into Social Security, you earned it. Every single paycheck for 30, 40 years, money came out before you ever saw it. You built this, you funded this. And when the rules change in your favor, or when the government owes you more than you're getting, you deserve to know about it immediately. Not buried in a government press release, not hidden in fine print, right now, in plain English. That's exactly what we do here at Senior Pension Guide. And today, we're walking through every layer of what just changed, what it means in real dollars, and the specific steps you need to take this week to make sure you're getting every penny you're entitled to. Don't go anywhere. Let's get into it. Social Security is not a handout. I want to be crystal clear about that. You earned this. Every single dollar that comes out of your Social Security check represents years, sometimes decades, of hard work, sacrifice, and contribution. You paid into this system your entire working life, and you deserve to know exactly what's happening with your money. Right now, something significant has changed, and the government hasn't exactly been sending out newsletters about it. The confirmed update that takes effect March 1st involves several layers of the Social Security system, and I'm going to walk you through every single one of them in plain English. No government jargon, no confusing bureaucratic language, just the facts, the way you deserve to hear them. Let's start with the cost of living adjustment, what most people call the COLA. Now, you've probably heard this term thrown around, but a lot of people don't truly understand what it means for their monthly check. The COLA is essentially the government's way of adjusting your Social Security benefit to keep up with inflation. Every year, the Social Security Administration looks at the Consumer Price Index, which is just a fancy way of measuring how much everyday goods and services cost, and they adjust your benefit accordingly. For 2025, the COLA was set at 2.5%. Now, I know some of you heard that number and thought, that doesn't sound like much, and you're right to feel that way. When you're filling up your gas tank, buying groceries, paying your electric bill, and watching everything around you get more expensive, 2.5% feels like a drop in the bucket. But here's what matters. That adjustment is now officially reflected in your March payment. And if you haven't sat down and looked at your actual benefit amount recently, you need to do that today. For the average Social Security recipient, this 2.5% increase translates to roughly an extra $50 per month. Now, $50 might not sound life-changing, but over the course of a year, that's $600. And if you're a couple where both of you receive Social Security, you could be looking at an additional $200 or more annually. That money is real. That money matters. And you should know exactly how it applies to your situation. But here's where it gets even more important. And this is the part that most people are missing entirely. The March 1st update doesn't just affect your base benefit amount. It also connects directly to the windfall elimination provision and the government pension offset. Two rules that have been quietly reducing the Social Security checks of millions of Americans for decades. And if you've worked in a government job, a school district, a fire department, a police department, or any public sector role where you received a pension that wasn't covered by Social Security taxes, you need to pay very close attention right now, because what I'm about to tell you could mean thousands of dollars back in your pocket. The Social Security Fairness Act was signed into law, and it eliminates both the windfall elimination provision and the government pension offset. These two provisions were originally designed to prevent what the government called double dipping, collecting both a full pension and full Social Security benefits. But here's the problem with that thinking. Many of these workers, teachers, firefighters, police officers, postal workers, they also worked second jobs. They worked part-time. They had spouses who paid into Social Security. And yet, their benefits were slashed, sometimes dramatically, because of these two provisions. We're talking about reductions of hundreds of dollars per month for people who genuinely earned every penny of their Social Security benefit. With those provisions now eliminated, the Social Security Administration has been processing retroactive payments and adjusting monthly benefits for the approximately 3.2 million Americans affected, and March is a significant month in that timeline. If you or your spouse worked in a public sector job and you've been receiving reduced Social Security benefits because of WEP or GPO, you need to contact the Social Security Administration right now. Not next week. Not when you get around to it. Right now. Because there may be back payments owed to you, and there is an updated monthly benefit amount that should be hitting your account starting this March. Now let me talk about Medicare, because this is where I see a lot of confusion, and confusion costs people money. Your Medicare Part B premium is deducted directly from your Social Security check. That's how it works for most people. And in 2025, the standard Medicare Part B premium increased to $185 per month. That's up from $174.70 in 2024. So while you're getting that 2.5% COLA increase on one hand, Medicare is reaching into your check on the other. This is something you need to factor in when you're looking at your actual net Social Security income for March and beyond. But here's something that a lot of seniors don't know. And this makes me genuinely frustrated because it costs people real money every single year. If your income is above a certain threshold, you pay more for Medicare Part B. This is called Irma, the Income-Related Monthly Adjustment Amount, and the income thresholds for Irma were updated this year. If you or you and your spouse together are earning above $106,000 annually, you are in Irma territory, and your Medicare premium is higher than the standard amount. For some people, we're talking about premiums of $600 per month or more. That comes directly out of your Social Security check. Here's the part most people miss. If you experienced a significant drop in income recently, maybe you stopped working, maybe you had a major financial event, you can actually appeal your determination and potentially get that premium reduced. Most people don't know that. Most people just accept whatever number the government gives them. Don't be that person. Let me also talk about what's happening with Social Security earnings limits, because this affects a specific group of people who are still working while collecting benefits. If you are under full retirement age and you're still earning income, Social Security has a cap on how much you can earn before they start reducing your benefits. For 2025, that exempt amount increased. You can now earn up to $22,320 per year without any reduction in benefits. If you're in the year you reach full retirement age, that limit jumps significantly to $59,520. I want to be careful here because I've heard a lot of people misunderstand this rule. If your benefits are reduced because of the earnings limit, you don't just lose that money forever. Social Security recalculates your benefit at full retirement age and credits you for those withheld payments. But it still affects your cash flow right now. So it's important to understand exactly where you stand. And I want to spend a moment on Social Security taxes, because this catches people off guard every single year. Yes, your Social Security benefits can be taxed by the federal government. I know it feels wrong. You already paid taxes on the money when you earned it, and now the government wants to tax you again when you collect it. That's the reality, and you need to plan for it. If your combined income, which is your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefits, exceeds $25,000 as an individual or $32,000 as a married couple, up to 50% of your benefits can be taxable. If your combined income exceeds $34,000 individually or $44,000 as a couple, Up to 85% of your benefits can be subject to federal income tax. This hasn't changed dramatically with the March update, but it connects directly to how you should be thinking about your overall retirement income picture right now. A tax professional who understands Social Security can help you structure your withdrawals in a way that minimizes how much of your benefit gets taxed. And that's a conversation worth having this year. Here's what I really want you to take away from all of this. The Social Security system is not simple. It was never designed to be simple. And honestly, I think that benefits the government more than it benefits you. Because when people don't understand the rules, they don't ask the right questions. They don't appeal the wrong decisions. They just accept whatever check shows up in their bank account and assume the government got it right. But the Social Security Administration makes mistakes. Benefit calculations get wrong. People qualify for adjustments and never receive them. People are owed retroactive payments and never see a dime because they didn't know to ask. So here's what I want you to do this week. Pull up your My Social Security account online. If you don't have one, create one today at ssa.gov. Look at your benefit statement. Look at your earnings history. Make sure every year of your working life is accurately recorded because your benefit is calculated based on your top 35 earning years. And if there are errors in your record, you could be getting less than you're entitled to. This is not complicated. It just requires you to take 20 minutes and look at the information the Social Security Administration has on file for you. If you were affected by the WEP or GPO elimination, call the Social Security Administration directly. The number is 1-800-772-1213. Yes, I know hold times can be long. Yes, I know it's frustrating. But if you're owed additional money, that frustration is worth it. Some people are going to receive thousands of dollars in retroactive payments. That's money that belongs to you. If you believe your Medicare Irma determination is incorrect or your income has changed significantly, file a life-changing event appeal using Form SSA 44. You can download it from ssa.gov or pick it up at your local Social Security office. Don't just assume the number on your statement is final. And if you are still working while collecting benefits, sit down and actually run the math on where your earnings stand relative to the annual exempt amount. Make sure you understand how the earnings limit applies to your specific situation so you're not caught off guard by an unexpected benefit reduction. Look, here at Senior Pension Guide, we've spent a long time helping people take control of their retirement money. And one of the things we've learned is that the people who come out ahead are not necessarily the ones who made the most money. They're the ones who paid attention. They asked questions. They didn't assume the system was working in their favor. They verified. They appealed. They showed up for themselves financially in a way that a lot of people simply don't. You worked your whole life for this. You paid into Social Security for decades, and this is your money. Every update, every adjustment, every rule, change matters because it directly affects how much of your own money you actually receive. March 1st is not just another date on the calendar. It's the date when several of these confirmed changes officially take effect. And the difference between knowing what's in this update and not knowing could be hundreds or even thousands of dollars over the coming years. Don't leave that money sitting on the table. Don't let the complexity of the system become an excuse for inaction. You deserve the full benefit of everything you've earned. And today, you have the information you need to go get it.